Good evening, ladies and gentlemen, and welcome to our webinar presentation with Raghee Horner, where she is going to help you discover why volume is the key to confident trades. Some quick housekeeping to go over. You may see some interactive features like polls and offers popping up during the webinar. Also on the right-hand side, you'll see a live Q&A tab where you can ask questions that will go to our moderator team as well as Raghee at the end of the presentation. Without further delay, here's Raghee Horner.
All right, we should be good to go. Let's get a little audio and video. Kind of neat to be on camera with you all. And let's get our awesome slide deck up and running here. Great to see everyone. How was that waiting room? All right, let me get the slide deck. All right, we are good to go. Why volume matters. Everyone should be able to hear my voice, see the video. Welcome to my office, by the way. I know a lot of you that join me for Charts and Coffee, well familiar with this view. Great to have you here. And you should see the Why Volume Matters slide right there on the screen. All right, most excellent. Let's get to it. Let's get to it. Sound and screen good to go. I am stoked. We have a lot of great information for you all here today. So if it's not already obvious, I'm super excited to see you. Welcome to Why Volume Matters. This is the missing link. And I might get a little emotional in this webinar, but these are the missing links that are probably not what you think they are. So a little intrigue to kick things off. We'll be covering in detail a lot of what is working, not only right now in 2022, but where they started working, where these were forged. And if you have pen and paper handy, grab it. I even take notes during my own presentations. I have your questions. I can see them here. So we will get to them as we go along. But again, thank you for being here for Why Volume Matters. All right. Why are we talking about, of all things, volume tonight? Right? Volume is, and I don't mean this in any way exaggerated. It's probably not emphatic enough. Volume is commonly undervalued, underutilized, underestimated, absolutely misunderstood. And the sad thing is, a lot of traders don't realize that what they're doing with their volume analysis is at the root of the problem. And the bad news is that price without a proper view of volume is going to cause losses. I've been there, right? Lots of losses when you don't have that right view. The good news is it can be fixed, all right? This will be the idea we come back to again and again. It's the needle mover. It absolutely is. Volume is the game changer, but not until it's applied in the way that I'm going to show you. And I'm going to show it to you in detail here today. So let's go ahead, keep moving on. Why does volume matter? Again, right now. So like a lot of you, I've gotten a lot of emails where people are extremely frustrated because they don't know what to do. People who want to start trading or started trading, right? So are you unsure of what the market is doing? Are you worried that you can't trade this environment? Or worse, that's what your P&L is telling you. And I've been there. Maybe you're confused about setups right now. Maybe you don't even see them, right? That you don't know which direction to trade, that you cannot see a clear entry trigger. I mean, how frustrating is that? We don't see what we need to see, and we feel really handicapped by that. Or that you don't know where to put your stop loss or your profit target. Or when you do put them somewhere, it seems like exactly the opposite of what you should be doing. Again, very frustrating. So maybe ultimately, what everyone can benefit from right now, what everyone can benefit from, I'm going to show you is this. Day traders, swing traders, investors. So traders who like to be in and out of their trades within hours, maybe minutes, right? My day traders out there, right? Traders who like to hold their positions for days, maybe weeks. My swing traders out there. Traders who have positions that they plan to hold for months, maybe even years. My investors or position traders, right? The longer term time horizon. I'm every one of them. That's a big deal to me, being able to handle all those time frames. What is affected by volume? Everything, gang. Everything. Futures, check. Options, check. Stocks, check. ETFs, right? So are you with me so far? You know that we need volume. I'm going to show you how maybe what you're doing with volume right now is not as effective as it can be. We need to understand what kind of volume we're going to use. So are you ready to get into it? I'm raring to go. So that's the lead up. So for those of you that may not know me, and I'm going to probably sneeze throughout this presentation, my apologies because I actually have a 100-degree fever right now. And I was telling my husband, I said, you know what? We can't delay this. This is going to help so many people right now. You probably can hear it in my voice. Yes, I'm not I'm not feeling wonderful. So I appreciate everyone flexing with me. And we're going to get through this, and it's going to be a needle mover. I'm super excited. But my name is Raghee Horner, and I'm the managing director of Simpler Futures, as well as my clubhouse, the Sector Secrets Mastery. Shout out to my mastery members out there. I've been with Simpler Trading for about 13 years now. And like I said, I love trading. I love traders. I love looking at the charts, teaching traders like yourself how to succeed at trading. What are those little distinctions that make the difference? So I've been trading futures, Forex, stocks, options. I've done crypto, you name it. I even did some binary options. I've been doing something or other for 35 years. I love the game. I know so many of you do as well. I've written 3 books, which made my mom exceptionally happy. I've traveled the world teaching traders, and I love actually just teaching right from here in my home office. I've seen how mastering the markets can change people's lives, and it has mine, right? That's why I'm so passionate about this. All right, something that you may not know about me, maybe not. I have been where many of you are right now, which is that state of frustration, dealing with the unpredictable markets, can't find the clarity, losing confidence in yourself or your tools. You don't trust what you see on the chart, frustrated, maybe a bit scared, maybe really scared. So what is going on? It seemed like it was so great, not but a couple of years ago. Things are tough. It's a completely different time, gang. And the negativity is about as high as I remember seeing it in probably the better part of a decade. Gas prices, groceries, cars, the cost of basic essentials. It's obvious, gang. This is a very different environment. And we're all experiencing this rising interest rate environment, dealing with inflation that, well, the Federal Reserve kind of created in the first place, right? This inflation problem that we're all in. We have to trade through it all the same. Many investors are looking at their portfolios and they're seeing they're down 20, 25% or more. I look at my portfolios and they're down. There's no one who's spared from this, right? Uncertainty is that pit in your stomach. For me, it's the knot between my shoulders. I don't know. Maybe that's just me, but I think a lot of you probably can relate. Hopefully not for much longer, though. I don't want you there in that feeling for very long because, well, frankly, you don't have to be, right? Because tough times come and tough times go. That I can tell you, right? As they say, if you're going through hell, keep going. 2008 was a scary time. I had friends telling me, Wall Street buddies had said, hey, we're not that far from putting your card in the ATM machine and the card not being given back. And I couldn't even fathom that. It was something beyond my reality. This is the kind of things that they were saying, things that we had never really even dealt with before. So in 08, now, y'all remember 08? I do, like it was yesterday. I had to figure out how to trade through that chaos. And not succeeding, as it is with many of you, we've burned the boats. We're traders. There's no not succeeding in this business. I get that. And I know for me, trading has been my full-time gig for 3 decades. This is how I support my family. This is what I do, right? This is my place in the world. It's a trader. I had to figure out what I was missing. Now, ultimately, 2008 shook me in a way that even now when I was putting this slide deck together, I probably underestimated. I really did. I've traded through wars, hedge fund implosions, tech bubbles bursting, but 2008 really felt different, scary different, right? Paralyzingly different. So figuring out what I was missing was the only way. So I had to break down my analysis to find what those clues were on the chart, like we kind of feel like maybe right now. So I realized this. I was looking at price, the news, even my indicators, but what I was not looking at was price-based volume, all right? So what did I find was the big aha moment? What was the gift? And it really was a gift ultimately. What was a gift that 2008 gave me? And looking back, I'm very grateful. So other than initially frustration, fear, chaos, uncertainty, clearly some gray hairs, a lot of what I'm seeing is like it is today. So there's a lot of this echoing. But these are 100% opportunities, gang, to become a better trader. We can become better traders during these times. Nobody becomes a better trader when the markets are going straight up. And a lot of us are finding that out now, unfortunately, that 2020 and some of 2021, those were anomalies, right? This is different. If you can learn to trade this kind of environment, you can trade any kind of environment. That's the cool part. So I chose, right? So again, we're going to learn priceless skills, and I'm being kind of cute with priceless. We're going to emphasize other things other than price. So I chose process over panic, right? 2008 gave me the key that would be the key to my trading every day since. It's allowed me to continue to trade any type of market with certainty. And what does certainty feel like, gang? You know, we want to feel like we felt in 2020 again, right? It feels like knowing which time frame to look at. It feels like knowing what trade to wait for. You know your pitch. It's having the confidence to see what you have on your charts and act on it, right? It feels like, well, never having blown up an account in over 3 decades. That's where I sit. It feels like knowing I can take care of my family and help other traders. This is what I want for you as well. But think about this. Priceless skills. I'm being a little cute. Not emphasizing price alone, right? Because 2008 taught me that price was not enough. Most of us are in a price first and only approach. We're looking at price charts. Our indicators are price based, meaning we're looking at open, high, low, close in some form or fashion. And then that's really it. So some of the strategies I uncovered and developed in 2008 have been applied in tough times since '08. So they're definitely road tested. So I'm going to show you what I mean. Let's just get right into the charts. All right. Keeping your cool during a panic. Now, this isn't 2008. Okay. This is probably after '08, one of the swiftest sell-offs that we've seen. So this might look like a lot of secret squiggles. All right. So let me put it this way. What if you were just to look at this, everything on this chart as support and resistance, because that's all that it is. It's just support and resistance. And the support and resistance is based on volume. That's the cool part. This chart shows one of the most emotionally charged times in the stock market. Actually, it shows two. Here's 2019. And here's the pandemic sell-off in 2020. It shows two of the quickest sell-offs in history, right? So looking at this chart here, I'm getting a little goosebumps when I look at this chart here. But keeping with the process, knowing your patterns, and letting that help you mute the emotion and the fear that's out there allows us to look at this trade and look at this chart really and find where are the trades, right? So I never want to be alone in thinking that this is the low that's going to hold. Or even that's a high that can't go any higher. I never can be alone in that. I want you to think about that, right? We can never be alone in trades that are going to work. So let's do this. I'm going to grab my drawing tool here and show you a couple things. All right. So look about what volume said with both of these, and I'm going to draw a couple lines on this chart in here. Think of the top. Think of that as a line chart, and that's the upper end of resistance, right? And I already drew the green line down in here, but let's run it down there. This was the low in the 2019 sell-off. This is Q4 2018, Q1 2019. At that point in time, this was one of the most dramatic sell-offs in history until 2020. But take a look. Take a look at how this support held. By the way, take a look at how the resistance that preceded the sell-off, right, in this area, preceded the sell-off. I'm not saying those are shorts and longs, but think about knowing if a market's kind of overextended, knowing how to measure it, right? I know this may not look like other things that you're using right now, but I want you to think about this from the standpoint of historical context. If this can handle crazy moves like this, imagine things that are more sedate. Well, you don't have to imagine because I'm going to show you. 2022 has been a profitable year because what I know and what I'm going to teach you about volume. This is one of my smaller accounts testing only the setup that I'm going to teach you in this webinar. In other words, it's three things: volume, the underlying market structure, and price, right? Those three things used again and again. So I had 140 setups, and it's October. So this actually went back to, I think, late December. And the number of transactions are, of course, in and out. What I want to show you is, do I lose? Of course, of course. This, by the way, my win rate for this stretch is only about 67%, 66 or 67%. So this is not a crazy win rate. I think I've dropped down as low as 63. I've been as high as maybe 67, 68%. But I want to show you that because of volume, we can make decisions and find trades. It's just that simple. And that's just the one pattern that we're going to talk about here. All right, so this is how it worked again in July. So yeah, I showed you 2019 and 2020. Let's talk about something more recent. And this one I actually really love. So this was a pretty significant move, but the reason I love this is that on July 7, in the free videos for Simpler Trading here, I recorded a video analysis and called it the light at the end of the bottom. Some of you might remember that back on July 7. It's still back at the channel. And I basically pleaded with traders. Okay, slight exaggeration, but I basically pleaded with traders and asked them to consider the long side of the indices, not to short in the hole at the new lows. And let's take a moment to talk about volume here. When price breaks to a new yearly low or a new yearly high for that matter, there are stop orders, right? Traders that are waiting to enter as that level is broken. So new lows trigger sell stops and it gets traders short. And new highs trigger buy stops and gets traders long. So there's always, just on the outskirts of those levels, there's people that want to enter in that direction. In this case, who won? And you might be looking at this chart saying, Rog, I'm not really sure what I'm looking at. Let me show you here. All right. Take a look. So this is when I cut that video right back in here. And then I got in this area. So video was sent and saying, hey, gang, please, please, please do not short this market. I know the sentiment in June and July was about as bearish as it gets. I wonder why. It was the obvious conversation. Got in here and took that ride higher. Just that's it. Why? I want you to think in steps. Volume, market structure, chart pattern. That's the order in which every one of those trades that I showed you earlier in my 60 whatever percent win rate: volume, market trend, pattern. Okay. Now in this case, look, the signal yielded a lot. It's going to sound like a lot, but it's a futures contract. This was a $23,250 winner per contract. Now, not everyone can take an underlying futures contract. They're kind of pricey. So for those of you that don't trade futures, don't fret, because I'm still going to look at the ES to trade the SPY ETF. All right. And we bought these for $15, sold them for $42. That's what we did. Bought these things for $15, sold them for $42. So even if you don't trade futures, or maybe if you do, if you prefer options on futures, if you prefer options on the SPY, heck, maybe you trade the SPX, we can look at the ES. We can look at volume. You might be saying, Ron, what about the SPX? You can still look at the ES and set up trades like this. It's really exciting when you can find out where that flow is going. All right, I'm getting a little too ahead of myself. What's the solution to understanding and using volume? So it's a toolkit. I showed you some of these. It's an anchored VWAP, right? So what these tools do is they work together, and they're going to work with things you already have, because most traders have price-based indicators. We're supercharging that with volume-based indicators. So now instead of a one-dimensional view of the market, you've got a two-dimensional view of the market. You've got price and volume, okay? Use these tools is like reading a line chart. And I'll show you again a lot more examples. And then support and resistance. So can I find support and resistance? And can I find a squiggle that looks a lot like a line chart? It's about the easiest type of chart you can look at. We have an anchored VWAP, an anchored volume profile, an anchored V score, volume labels, and this is new, the Trendolorian. I'll talk about the Trendolorian. Don't get preoccupied with the names. We're going to go through all the different pieces. By the way, though, the Trendolorian is the very first momentum tool that I've created, and it's a momentum tool using volume. All right. So what is volume? It's a measure of how much a stock or an ETF or an option, a futures contract, how much has been traded. Here's the important part: in a specific period of time. This is where we start to look at volume in a different way. So already we're saying there's a specific period of time that I'm studying volume behavior. Keep that in mind. So an anchored VWAP, a VWAP. See, people say, what do you use? I use a VWAP. No, we use a VWAP, anchored VWAP. A stands for anchored. Again, remember we just said that volume is a certain number of shares or contracts traded at a specific time. This is the key to using volume. So from which point forward, think about this, from which point forward am I going to study volume, support, and resistance, and volume trend? I know I may not have heard of that one before either, right? And volume trend. I know for me, if I get that part wrong, I'm going to look at the wrong read, right? But over the years, I've created a system around when and which points to anchor. But most volume-based tools, remember this, I use a VWAP. What's the difference between a VWAP and a VWAP? Remember that most volume tools just reset each session, which is better than nothing, but it's not clearly as effective as anchoring, okay? So what is a V profile? This is probably one that some of you probably are somewhat familiar with because it has the point of control, which is the most volume traded at a specific price. So point of control is at, say, 20. The most volume under a specific period of time was traded at 20, okay? Volume at a price. The value area high and the value area low, well, this is where 70% of the trades have taken place. So V profile looks for which price levels, as it says right here, are the ones that market participants reacted to the most. Think about it this way. It's attention. It's attention, right? Okay. So we move on to my beloved V-score. V-score was the tool, gang, back in 2008 that I created when I thought my career as a trader was over, that I could not manage money, that I couldn't trade, that I thought it was the end of the financial system. And V-score was what I went back into my office and created. And it's the ultimate oscillator to let us know when the markets have wandered too far away from the mean. All right, technobabble alert. All it means is the average. There's an average operating range, right? And when we get too far away from that, like a bungee cord, it's typically going to snap back. So are we getting too far away from the average? When did the market really reverse based on volume, right? Really reverse. We could see price movement, but maybe not a volume move. What are the support and resistance levels using volume? If you recalled on that chart from 2019 and 2020, I drew some lines on the upper and lower end of the V-score. We'll do a whole lot more of that. And this is one that's really different. What is the trend in the volume? Yes, there are trends in volume. So you can read that on the V-score. And yes, you can read a volume-based trend. So remember, volume weighted average price just simply shows the average price over a set period of time adjusted for volume. That might sound like gobbledygook, but think about it this way. How many shares are trading at a certain price? And keep coming back to that, right? How many shares, how many contracts are trading at a certain price? All right, now I'm going to take a step back here because most traders are probably familiar with the histograms at the bottom of the screen, right? The volume-based histograms that tell you how many shares were traded on a particular day or at a particular time, but not at a particular price. So you might say, Rog, is there no advantage to having that? No, there is. There is, okay? So I'm going to show you where some traditional volume analysis with a little bit of a twist here is going to give you more information than just looking at those histograms. So this candle over here, way off to the right, that was widely panned as a trap. This move higher, right? Oh, forget about it. We're going to short into that. That's just, trapping buyers, right? A candle that sellers should sell into for the inevitable fall. That was the vibe. right? That was what most traders favored. That was what they liked. What did volume say? Well, I have two little arrows here corresponding with that candle going up, right? The bullish move was 132% of the average candle for the last 21 bars. The last 21 bars, this was 132% of that, all right? This is where traders got into big trouble. What is the opinion to the upside if I tell you that we're looking at 132% volume? There's a lot of opinion behind that. Is that a move you're going to fade? Is that size that you're going to fade? Fade meaning step out in front of. Of course not, only if you hate your money, right? So I don't say any of this to be bullish or bearish, but rather to remind ourselves to be disciplined. Volume speaks volumes about moves that we see every day. Here, this was, hey, short into that. Does everyone know what we've been doing since October? We've been moving higher. The volume cued it in. Let's look at another example, right? Here's another example. This was a move, and this was a little bit different. This is actually going to help you with a setup. So on August 16, we got a stall and a reversal pattern. Okay, so you might say, okay, where is that? Let me circle that here so you can see it on the chart. We got a stall and reversal pattern right in there. Okay, on the 17th, we started moving lower. That's the last candle you see on this chart. It's the volume on this day as the price is moving lower that we want insight on. Right? What did the volume label tell us? What was the participation? It's 103% of daily average on that bar. That's participation, right? That's volume showing us this is the way. What if you could use volume to confirm stalls and breakouts all the time? Do you think that would offer a little bit of an edge, right? So by the way, that signal ushered in a move from from this 42.80 level to 41.35. So that was 145 points. At $50 per point, it's about a $7,200 win per contract. Now, with the SPY, I mentioned earlier, if you want to trade the SPY in lieu of the futures, no problem. These were the 425 puts in the SPY. That's what actually correlated with the ES at 42.80. You look at 42.80 on the ES, and we were trading at the 425 puts on the SPY. Bought those for $13.10, sold them for $19 in 5 days, right? The volume pattern did its job. And I'm going to keep coming back to this idea of a pattern, because that's the only way that when things get chaotic and very fear-based, that we're going to have the ability to stick with our process and mute that noise, right? Okay, Trendolorian, this is a new one. So the volume labels are new to some of you. Trendolorian is super new because we haven't ever released it, and I'm very excited about that. So, all right, how am I doing? 100-degree fever, doing all right? I'm actually sweating a little bit, but maybe that's just because I've got these lights in my face. Thank you, everybody, for yeah. I see everyone. We'll definitely cover the questions. I see them streaming in. I see some familiar names. Most excellent. We will definitely talk more about that. By the way, the entries and the exits are pattern based. They are pattern based. So very cool. All right, Trendolorian. Yes, I'm a Mandalorian fan. Absolutely. This is the way, right? That's kind of what Trendolorian does. So let's look at the charts. I can show you the various tools at work. All right. So these are the trades we've taken. The number of these are taken in Sector Secrets or my futures room, right? So some of you will remember them depending on which room that you're in. Trendolorian, yes, as in this is the way. It's momentum based on volume to show that acceleration that we'll see in price, but that's being powered by volume. The signal is the cyan colored arrow. And, nothing stands alone, gang. Remember we said this was a kit? I'm not just going to blindly follow arrows. I wish the trading were that easy. That here's an arrow, let's go. You and I both know it's not quite that easy, is it? Remember I said 3 steps: volume, underlying market trend, what's the trend of the market, and then the pattern. Well, in this case, look at the V-score here. When you look at the normal operating temperature, remember I said this is like a line chart? Where is it? At the upper end, isn't it? Here I'm having the Trendolorian telling me this is the way. Trendo, we call it Trendo as a nickname. If I'm going to look for a setup here, I need volume to be telling me we have resistance, and I need the trend DeLorean to tell me that we're looking at downward movement. Now, I want to really show you really quickly another arrow. See that one right there? Do I follow the arrows blindly? Yeah, we moved up a little bit, but no, that arrow is corresponding with the upper end of the V-score. You're going to learn that you put these tools together. We just don't blindly follow the signal, right? We have to filter them. Always three pieces to that pattern, to that process. All right, so let's look at another one here. I want to give you a couple examples. Trend DeLorean has a few signals, and of course we filter them, right, with that process. So let's look at this one here. Remember I said there are trends in volume? Look at this right here. I'll just overlay this line right there. See that right there? That's the trend moving lower in volume. That's about the only trend line I'll ever draw. And as the V-score is dropping and we're getting a falling trend, and by the way, look at how few signals. This is the only trend DeLorean signal. Now you might say, Rog, what are these other arrows? Some of you might know that's the Darvis 3.0. These are not trend DeLorean. This large cyan colored arrow, that's the only one on this chart. This is the entirety of 2022 on crude oil. So these are not arrows that are popping up left, right, and sideways. They're very discerning. That's the signal, right? That signal in a falling V-score market, that's a short, gang. And then those of you that are already familiar with things like grab candles, you're thinking, of course I'm going to short Rog. The grab candles are red. Grab candles that are red are bearish, right? So you'll notice I'm not abandoning things you probably already know that I've taught you in the past. We're just adding another dimension to it, which for me is very exciting. All right, so moving on. Volume support and a pattern trigger for 1,510-point run in the NASDAQ. Gang, this is very much the same light at the end of the bottom, and this was taken on the NQ. When indices move, they tend to want to move together. So volume applies, by the way, I know we're using a lot of daily time frames. Volume applies to day trading and end of day trading. For the purposes tonight, and what's really cool, hopefully I'm not sitting here with 100-degree fever next week. That would be bad. Next week, we're going to talk about day trading. So for the purposes of tonight, end of day charts, daily time frame charts, and we also looked at a weekly chart as well. So longer term, we're going to get together and talk about volume on day trades. And my sector secrets, folks, you already know, since we pretty much shifted the gear into day trading in mid-June, what we've been doing, right? What kind of win rate we've been experiencing. And so next week, I'm going to share a lot of that with you all, which I'm very excited about. So it's a two-parter, right? We have our exciting conclusion next week, November 2nd. So this pattern and process of using volume and this volume toolkit that I'm showing you, intraday, end of day, and weekly, okay? It's not any one time frame. It's whatever time frame you like. If you want to do this on a 1-hour chart, go for it. You want to do this on a 10-minute chart, go for it. It has nothing to do with the interval. It has to do with participation and measuring this in a different way. So a perfect example of volume indicating a shift in sentiment and support developing. All right, that's what's happening here on the NAS. I've highlighted this green line. I want to make sure everybody sees that. Look how many times we've bottomed out here. Support and resistance using volume. All right. So in this case, it was a retest of a very strong V-score, right? And the market trend shifting from neutral into neutral out of the downtrend. So that's happening, right? If you're wondering, okay, Rog, when was that happening? Right in there. Okay. And if you recall, July 7, that's when I sent out that warning. Why? We had already bottomed out on volume. That volume bottoming out is on an instant trigger, right? Remember, we want to put that process together. Then we waited for the underlying trend. Then we waited for the pattern. And by being this patient, by not wanting to put on the hero trade and try to, front run the market and call the bottom, let folks, frankly, on TV do that. We are supporting our family with these ideas. We can't take reckless trades. What we waited for was the volume, then the trend, then the pattern. And that happened on July 15. So 8 days after I made that video, I bought it 11,980 exited at 13,490. That took exactly a month. It was July 15 to August 15, right? So while overnight futures positions may not be for everybody, remember there are micros, there are options on the futures, and of course QQQ calls work just fine and have the same exact setup. This is what I call choose your own adventure, by the way. Some of you are probably already familiar with that, which is we have a setup on the NQ. We have a number of ways that we can execute that idea. That way we're never leaving any kind of trader behind. You want to trade the QQQ calls? Awesome. You want to trade the micro? No problem, right? You want to trade options on the NQ? Go for it, right? That's what's so exciting about this. All right, let's take a look at Apple. We've taken a look at a lot of indices and things like that. Let's take a look at a stock. Does this work on stocks and ETFs? Absolutely. If it has volume or if there's a way to measure the volume, we can use these tools, period. So much like most of the stock market, Apple was trending lower. You can see it moving lower, lower, lower through most of May and into June. Remember, that's when the fear and chaos and absolute market getting crushed sentiment was just pinned, right? You know what that felt like back in there. And again, how can you mute that noise? Because it is noise, right? So through May and June, the volume began to show the size was back in play. Look at that green line there. Volume started to go back into play. We're testing these levels. Gang, that's support. Don't get concerned that it's not a price chart. It's a volume chart. There's support and there's resistance and there's trends in volume. So you can see that there. And again, we're not going to step out in front, try to pick a bottom. We're just noticing that that volume support is back in play. So by July 12, what happened? Well, a lot of you will say, Rod, we started seeing green grab candles. The market trend shifted. Volume told us, be ready. It's not that you can't short the market, but volume told us, be ready. And some of you might already be saying, wait a minute, Rod, couldn't I have shorted this and wrote it down to here? Now you're getting it. Now you're getting it, right? I mean, I could pick this chart apart in a number of ways, but if some of you out there, and maybe some of you are thinking, but wait a minute, Rod, there was a short there too before there was the long. Now you're getting it, okay? Now you're getting it. So the idea here was, these are, I'm trying to pick some recent trades in the midst of the melee, and a lot of folks say you can't buy this market. You can, right? So in this case, we bought 145 Apple calls at 920, and this one was a trade we held until the 19th of August. So it took us to about mid-August here, and take a look at our little pattern. Some of you are going to recognize some of these tools. Again, everything stacks. Everything I teach you always stacks. I don't abandon tools. They're all going to work together. Exited it for $26 per contract. So $16.80 contract per winner. And in this example, the most important takeaway is that the context of the trend is just as important as price and volume if you're looking for a high probability setup. The pattern isn't just follow the secret squiggle and buy or sell the arrow. The pattern is threefold. Remember, we're looking now at the market multidimensionally: volume, trend, price, right? Most traders pick just one, and then they wonder how I'm not seeing the market. And I want to say you're looking at a one-dimensional view, not a three-dimensional view, right? So we always want that. And one cue to watch, take a look at the candle colors. We've talked about that a few times. Most of you probably have grab candles, so these are not unfamiliar, right? All right, Tesla. Blue Horseshoe loves Tesla calls when this pattern happens, all right? Tesla is always a symbol that's super popular. I don't trade it a lot, frankly. I've got to wait for a setup like everybody else. I don't trade it a lot, but it's a heavily weighted stock in the S&P and in the NASDAQ. So for that reason alone, it makes a lot of sense to know where Tesla is going because of its weighting, because of its influence on the broader averages. All right, so let's look how in advance the V-score once again starts to give us levels. Notice that low, low. I'm going to grab my drawing tool again here. Low, low. Once again, the low. What's happening here? Are there shorts? So some of you are saying, okay, Rod, all right, I'm seeing that short as well. No problem. But every time we're in this area, we get a little bit of a bounce. Every time in this area, a little bit of a bounce. A little bit of a bounce, right? We wait for the market trend to shift. and then we go ahead and put on the trade. So a lot of times there might be shorts in the midst of waiting for a low, that just like there might be longs in the midst of waiting for a short. You can think both ways, right? I'm just showing you some of the things that I prefer to do, which is not short in the whole, focus on some of the long trades as we went out of summer. Okay, so I bought Tesla at 240. So I bought Tesla. I bought the underlying stock at 240 on the 15th. So this is all corresponding with the indices also moving higher as well. Now the V-score can reveal where the breakouts are most likely to follow through. Take a look here. Let me show you right there. Think about how we're moving up and down through resistance, through the mean, right? If again, imagine that's a line chart. And in this case, I'm watching the V-score reading to tell me where we stopped before and where have we found resistance. So that was one opportunity to ride this higher, but then we had this interesting little split. And one of the things that we talk about after a split is it's very common for the stock to lose about 10% post-split, which is for a lot of traders, for a lot of traders, it's kind of a surprise. Oh, how come the stock isn't rallying after the split? This is where post-split it gets even more fun. There was a sell pattern that triggered on the 29th, right in here. Sell pattern that triggered on the 29th, right? So following the rules, volume, then market trend, then price, I bought the October 21, 275 puts, paid $21.60 for them, and I exited these at 66. So when I was looking at this particular capture, they were sitting at 55. I ended up having to take these right into expiration and exited them for 66. This is kind of a pricey, I know this is kind of a pricey name. It's a $2,160 option that went to 6,600. However, if you like to trade the XLY, if you like to trade spreads, you know, there are ways that you can make this fit your budget, your risk tolerance, right? If you're comfortable with a $2,160 option, great. This was a textbook setup. So that was an example of Tesla. All right. Next up, and I love showing you all these examples across a myriad of symbols. It's not just about one symbol or anything. It's how many different ways can we use volume? This one's crude oil. All right. So I've referred to in volume a few times. Again, hopefully that's kind of piqued your curiosity because it is unusual. Crude grinded higher, even exploded higher for a brief period of time earlier in the year, right? Only it started to lose ground June, July, right? See where it starts to tumble. Green grab candles became red. We were trading below the wave. Look at the direction of the V-score as well. Look at the direction of the V-score. All right. So think of it this way. See that red line that I've drawn? I'm going to redraw it so you can really see it. That red line is resistance. Okay. And this is where every time we went up and hit that red line area, right? Every time that we hit it, here, here, here. Volume said, boom, we're hitting a ceiling. Not price agreed, by the way, but volume confirmed we're hitting a ceiling, right? This is sell the rip, gang. If buy the dip is buying the retracements in an uptrend, sell the rip is shorting bounces in a downtrend. Not only were we looking at the price levels as they ran into different levels of price-based resistance, we confirmed it with the volume level, all right? And so whether that was the 29th of July, the 29th of August, or you can see right here. So here's your July setup. Here's your August setup. Look at the trend here. That's short the rip, confirmed with volume. So if you didn't know, and I think a lot of traders thought, oh, this is the rally for crude, right? How many traders started playing momentum to the upside, not knowing volume said, please don't buy up at new highs. We're hitting a volume resistance. Do you see now where at points where you're thinking, oh, the markets are going to continue and volume says, not so fast? Think of how many times that could save you from a trade that is just too vulnerable because you're thinking, well, it's bound to continue. And volume says, no, not so much, right? Think about that, because even if a tool keeps you from making a bad trade, to me, that's the same thing as making a good trade, which is knowing when to be flat. British pound, this is kind of funny because this is probably going to be one of my biggest trades of 2022. It's very quietly become that. And V-Score set it up pretty much all year long. Remember how I showed you the resistance in crude oil a moment ago? Look at the resistance in the British pound starting in March, right? So we've seen what's happened in October. And by the way, I captured this in September. You know what happened in October, right? We had that dramatic sell-off when I think the finance chancellor or whatever he was made some dramatic fiscal policy comment. We've seen what's happened in the wake of this. We've actually made lower lows than when I captured this chart. And I want to show you for just how long the V-Score said, please don't buy the pound. Please don't buy the pound. How much more does the V-Score need to tell us about volume-based resistance? And then you can see here, every one of those retests was an opportunity to short, even when the candle said, well, maybe it's a little bit more neutral to bearish. Volume said, no, please don't do that. Do you see how it's a checks and balances? That's why I say it's a process. It's a process of three things, but we use the same three things in pretty much the same three ways, right? Three ways meaning what's the volume, what's the trend, what's the pattern? Rinse and repeat, right? This is one setup, gang, right? And in 2008, the thing that got me out of the panic and the fear and the thought that this thing that I'd chosen to do for my living was gone, and having to look my family in the eye and say that, the thing that got me out of that is what I'm hoping to share with you here. My mentor said one thing, and if there's anything you're going to write down, gang, please write this down. I called my mentor in a panic and I said, look, I don't know, I can't do this. I have to quit. When I said I had to quit trading and people tell me I have to quit trading, I feel that because I can put myself right back there in 08. By the way, I rebuilt my portfolio in 09 with this one bit of advice. Find one setup. And he told me, and this is another one of my mentors that used to call me kiddo, which really makes me crazy, but he gave me great advice. Find one setup, kiddo. Let that be your anchor. Find one setup. Trust it, rinse and repeat. And I find all these years later, the longer I trade, this is going to be my third decade, I'm looking for less. I'm doing less. I'm focusing on a process of, okay, it's volume, then it's trend, and then it's a pattern. And if you can do that, if I can save you that headache and that heartache and that effort to say, oh gosh, when I get to be where I want to be as a trader, I'm going to be looking at fewer things than now. Absolutely. You're going to be doing much fewer things probably than you're doing now. That's been my experience anyways. And that was the advice that helped me turn the corner. And it made a huge difference. It changed my life. It changed my life. All right. What have we learned so far here tonight? And I know I've been going a mile a minute. We've been going full steam for 48 minutes now, but I hope, and we're going to cover questions. Absolutely. What have we learned so far tonight? Let me summarize the many, many words that I've used, and hopefully some of those resonated with you. Understanding the many layers of volume. I talked about time and date-based volume and how to use that properly. We have to look at it compared to what it's been doing, say, the prior 2 to 3 weeks and what it's looking like on average. Remember, I showed you 103% or 132% of average volume. That's how we know something special is happening. The rest of the time, we're using price-based volume, right? So understanding the many layers of volume will give you an edge that I know is going to give you more confidence and clarity, because I know that's what it did for me in the worst time in my life as a trader. So these tools are timeless. What I discovered in 08 has worked every year since on any time frame, because it's looking at opinion and participation. That's always going to be the way the markets move. Opinion, participation, attention, right? So when times are tough like this, and this has been a tough year, gang, and I remember what 08 felt like, because I'm getting that energy from so many of you with that same desperation. I know this is the key to better trading, because I know what it's done for me, right? So how do you get the key? Well, you know what we're going to be doing. I'm going to be teaching you all of this in a class in gosh, it seems like so far away, but yeah, come November, we're going to get into decoding volume. All right. There's some dates. We'll come back to this in a moment. All right. How do you want to go about learning volume, right? We have a basic plan, a pro plan, elite plan. I'm going to walk you through what is in each. This is a massive, massive package, gang, at any of the levels. The elite is ridiculous. I even asked Trish, but even though Trish is here in the office with me, I said, I want this to be an absolute ridiculous package where we can give everybody as much as we possibly can to give them what I wish I had in '08. Didn't have to go through blood, sweat, and tears. All right. What if you already have the Volume Max toolkit? By the way, it was called the VWAP Max. So if you're saying, wrong, I have VWAP Max. We just called it Volume Max because it makes more sense and I like the name better. So if you already have that toolkit, no worries. We have you taken care of. All right. So I'm going to go through all of this, but we have a package for those of you that already have the toolkit. And I know that's very often a question. And for those of you, the next question is, but Rog, do we get the Trendolorian and all that other cool stuff? Of course you do. Of course you do. I always love to be loyal to those of you that have already purchased things from me. If we upgrade any of these premium tools, we put the new stuff in there for you. It's a thank you from me to you for putting in the effort and the trust in what I'm teaching you. All right. So let's talk about these packages and you get an idea of what's going to work best for you. All right. So by the way, I'm getting told that the upgrades are already out. So if you already have this, you get to play around with the Trendolorian. But for those of you that don't have it, all right, now is your chance to take your trading to the next level. I hope that is something that I've conveyed, and that steady growth without panic and not too many gray hairs is also possible too. What if you're new to trading? If I were to teach the simplest class I've ever taught, this would be it, because it's one process / pattern, right? A process is basically do this, then this, then this, and a pattern is the recurring event of that. That's what this is. This was going to be the easiest class I've ever presented to you all, because it's just step by step by step. And I know a lot of times we think, oh, I'm just looking for a pattern. I showed you in those charts, gang. Volume pattern, trend pattern, price pattern. So you get to start with a clean slate. And that's what I'm so excited about, because the learning curve is going to be probably the most substantially cut down that I've ever been able to convey to traders. I've made all the mistakes. I've had all the panic back in 2008. So what I hope is the experience is going to help you sidestep that kind of year. Okay. You'll be getting all the tools you need. Let's keep moving into the basic package. And this might be great for a lot of you, right? Rog, I need to learn a little bit. You get the 4-hour class. You get all the indicators. All the indicators come with all the packages, gang. If you don't have the indicator, look at the basic or the pro or the elite. If you already have the indicators, I showed you already, we've got a package for you. Okay. So this is the basic package. And you can see here date, times. We always record the session. So if you have to leave early or you can't catch it live, it will be recorded. It's going to walk you through everything you need to know as to how to use volume and that volume, trend, price pattern approach. Okay. So you get the VWAP, the V profile, the V score, the volume labels, the Trendolorians, all the stuff that I showed you in those examples. All right. So it combines probably some of my most trusted and probably some of my most popular indicators. Again, volume max is the old VWAP max. Okay. By the way, tech is always probably one of the things that most people say, Rog, this is where I get stuck. I get what you're doing, but I can't get my charts to look like yours, etc. We have a pre-class tech session. All right. So that age-old question of, Rog, I can't get my charts to look like yours. We are going to address that and make sure that they do. Okay. The multi-trend is step 2 of the process. You will get that. Some of you probably already have it. I'm going to show you how to use this in that whole volume trend pattern process. It's an at-a-glance tool that's automated how to know whether you're trending or not, whether there's bullish momentum, neutral momentum, or bearish momentum? Do we have a bullish trend, a neutral trend, or a bearish trend? It's probably one of my most powerful tools, no doubt, and that is included. All right, this is super exciting. Lorna knows my indicators as well as I do. She's coded many of them. She's improved many of them. A lot of you know the Lorna bot. She is actually human. We just call her the bot because, well, we're not completely sure she's not half human. But she's going to have a tech session and she's going to walk you through this, getting your charts to look like mine, getting your charts set up so that when you go into the class and then eventually into live trading, you are good to go. So we're going to do this before the Saturday class. By the way, when you buy it now, when you buy the packages now, you get the indicators right away, gang. The trading view indicators, I believe, have to be pushed out. But once you buy the packages, the layouts and the indicators, they're available the moment you buy them, and you can play around with them before the class, right? You can hit me up in Charts and Coffee and let me know how you're doing with them. All right, the Pro package. Okay, moving on to the Pro package here. So what we've done here is, well, we're going to add the live trading, right? And so with the Pro package, again, November 5 class, 4-hour class, and this will be, again, probably the simplest class I've ever done because it's so concentrated to, this is the first step, this is the second step, this is the third step. In fact, some of what I've been doing with the slides is people ask me, Rog, I've got these other tools. Can they supercharge this approach? Absolutely. In fact, volume is going to work with any indicator you're using right now. So if you have an indicator that you love and you're wondering why it's not producing the results, this is likely the reason. So we'll be addressing a lot of that. You get 2 days of live trading, of course. Again, VWAP Max, V Profile, V Score, Volume Labels, Trend Orient, the entire package plus 2 days. And the multi-trend, which I will tell you, if you use the multi-trend, just it by itself, you're going to see that so many of the trades that you're making were fighting the trend or were a little too early to the trend. Okay, so by the way, live trading is going to be Monday, 8:20 to 10:30, and then at Central, I'm going to talk in Eastern because that's where I am. So Monday, 9:20 to 11:30, and then Thursday, you might ask, Rod, why the time? Remember I said next week we're going to get together again. So I hope everybody here is seeing that this can work on weekly and daily timeframes. Next week, I'm going to show you how it works on intraday timeframes. We have been killing it intraday, absolutely killing it because we're doing the same process. All right. So we're going to be live trading where we can day trade together, and we're going to live trade where we can set up the longer term timeframes together. Of course, we're going to have alerts. I will send those alerts out. Those of you that trade live with me know I also send copious notes. So if you're thinking, Rog, during live trading, I can't follow everything. I'm missing some things. I don't want to miss a thing. I send out the notes link as well. So not only do you get the alerts, you get these giant sets of notes where I'm literally walking you through, sometimes minute by minute, of the kind of setups that we're seeing. So you can go back and say, oh, this is what she did at 9:43. This is what she did at 10:05. And you can go back and sync up your view of the markets with mine. So it's a really cool thing that I find helps a lot of traders. All right, Pro package. Again, we're going to add in those extra pre-class tech session. I am so happy about this because, again, one of the biggest obstacles for traders is the tech. And Lorna Bot is the best. Like I said, she codes my indicators. She knows them inside out. It's going to get you on the right path before we get into the class. All right. Next up is our long-term portfolio management session. So some of you might be wondering, Rog, when you traded in 2008, what did you do? How did you use these tools to find that clarity and rebuild your portfolios? So for the first time, I'm going to get together and do a 2-hour live session about volume and how to use it in your longer term portfolios. Imagine positions that are 6 months, if not years, right? So these aren't quick in and out trades. This is your portfolio, your longer term holdings. I'm not going to give advice about investments. I'm just going to show you, because I can't, right? That's a no-no. But I am going to show you the signals and the patterns on the weekly time frames for those longer term holdings, right? So in this bonus session, we're going to take a look at those longer term, which are weekly time frames mostly, and how to be more tactical in any condition with your longer term portfolio. Super excited about this one. It's going to be a needle mover for a lot of traders, especially with the kind of drops we've seen in the markets, that there are opportunities to pick things up at prices we haven't seen in a while. That's very exciting. So the timing is perfect. All right. This is very cool. You get 30 days with me in the Sector Secrets Mastery. So you take the class, you trade with me for a couple of days, and then come join me in our community. I call it our think tank for a whole month. So now you're going to get follow-up trade ideas. You're going to get day trading, the weekly longer term portfolio. I alert those out as well, and our swing trades. And you join me for a month. And it's a perfect way to take what you learned in the class and then just drill it, see me use it. So very excited that after the class, a whole month with me and that Sector Secrets Mastery crew, you're going to love it. That group is the most, if you're looking for a supportive, active room, that group is, I'm just so grateful to have that group of traders. Between 9:30 and 4, they're just looking at the markets. No complaining, no boasting. They're looking at the markets, supporting each other. Okay. Very excited about that. Elite package. Okay. If there is I always like to have an offer that's just so silly good that it's just a no-brainer. This is it, gang. Elite package, 4 days of live trading with me, and then a whole quarter in the Sector Secrets Mastery. So this is the 90-day immersion. With this, we're going to have a mind meld, right? If there's a way to mind meld, this is it. We're going to go all Vulcan on this one. 4-hour strategy class, of course, November 5, right? You're going to learn how to use the tools. I'm going to teach you that pattern. I'm going to teach you that anchor that I taught myself back in 2008. That one setup. We're all just one setup away. That's what my mentor told me. We're all just one setup away. All the indicators, VWAP, V-profile, V-score, the volume labels, the Trendolorian, and that multi-trend. I don't know that I can pick my favorite amongst these. I really don't. They're all going to complement each other, and they're going to complement some of your favorite indicators that you have now that you might be struggling to get the most out of, right? Nothing is not going to be better with volume. So we have our tech session. Again, LornaBot's going to get you up and running with the indicators, and then 4 days of live trading. So 2 intraday, 2 end of day. During the intraday, we're going to day trade together. So far, since mid-June, we've been day trading every morning, and we're putting out anywhere between about 2 to 6 trades per morning. I mean, that's how great the day trading has been. And I'm going to show you next week these tools intraday. So if you think the end of day stuff looks amazing, wait till you see what we do intraday. So we're going to have intraday and we're going to have end of day, November 14, 17, 21, and 28. You can see how we split these up to make sure we do end of day and intraday. And of course, alerts. So if I have an alert for a day trade or the notes or the swing trade, or heck, even if I have an alert on a weekly for my portfolio during the live trading, I'm going to send it out to you all. And then, of course, remember, with the pro and the elite, you're going to be with me anyways for 30 days with the pro and for a whole quarter with the elite. And you're going to get those triggers as well for far, far longer than the live trading. Very excited about that. Beginner breakout session. All right. So whether you're new to using volume in your analysis, or you've been using it for years, you need to refresh your memory, learn a lot of the new nuances. Gang, I'm anchoring different. I am anchoring differently, and I have been for about 16, 18 months. So some of these nuances are different from, say, things that I might have been doing a few years back. Same indicators, different application. So here is going to be that time where we can get those nuances. We're going to spend 90 minutes covering the basics and getting you on track. So that breakout session, think of it as a fast start, quick start, getting started. Super excited about that. Long-term portfolio management. Again, if you wanted to know, yeah, Rog, how do I better put things in my longer-term portfolio? How do I watch them? How do I know I'm not alone in the trade, as you said that I cannot be? That's what we're going to do on the weekly time frame. So very excited about that long-term portfolio management session. I love long-term stuff. I love the fact that we can build these positions with a trader's mindset and trader's tools, but have a far longer time horizon. All right. And this is what we get to, again, with the elite, 90 days, an entire quarter. So you take the 4-hour class with me, 4 sessions of live trading, and then a whole 90 days with me, right? That means alerts for day trading. So we day trade about 5 days a week in the mastery. So you day trade with me every morning from 9:30 to about 10:35. Then we have other sessions where we'll look at longer term time frames. We have our portfolio management and macro session. This is all in the Sector Secrets Mastery. And these are some of the things that these are some of the things that some of the traders had to say. And look, the reason I share this, number one, it feels great to read. The reason I share this is because, great, Rog, you can do it. You've been doing this for 30 whatever years. Of course you can do it, that you created the tools. What I want to say is there are people like you that are doing it too. There are folks that have just learned this, and they might be a few weeks or a few months into this, and they're able to do it too. And that means a whole lot more to me. So yes, I can do this, you bet. But I want to show you that there are other traders that are in a similar spot saying, you know what, Rog, the light bulb went off. So could not be prouder of that group, learning and supporting each other. Okay, so here we go. Strategy class across the board. Again, if you want just the silly, ridiculous offer, that's Elite, gang. A month with me, all the tools, the pre-class, the beginner breakout, the long-term portfolio, and a quarter, right? Now, if you're thinking, Rob, yeah, maybe not a quarter, and I'm not even on coffee right now. This is me sick. You can imagine what I'm like when I'm feeling better. But again, thank you, everybody. We are going to definitely cover some questions here in a moment. If you just want to do the 30 days, the 1 month with me after the live trading and supplement what you've learned, perfect. The pro is perfect for you. And if you're thinking, Ron, I just want to get started, cool. That's why we have that basic, perfectly understand. I just want to make sure everyone knows that a quarter with me in the mastery is, I think, $5.97 a quarter. And so, imagine that's, not to mention the tools and all these other sessions. It's just a killer deal. That's just the no-brainer right there. We do have interest-free payments with PayPal credit. I think we have that with most of our classes. So let's go ahead and take some questions. I am very looking forward to the questions you all have. So let me go ahead and grab those. So can I repeat the scenario if we think we have the VWAP? Oh, sure. Yeah, it's a good question. So if you head on over to simplertrading.com/volume, and the package that I believe you're asking about, Alexander, let me go back here, is the one. There we go. Yeah, actually, if you just go to simplertrading.com/volume, if you already have the VWAP max, again, you need the indicators, okay? Me teaching you how to use them and not having them on your chart is not going to get the job done. But if you already have them, yeah, head on over to simplertrading.com/volume. If you prefer to talk to somebody, the number is right there at the bottom, 512-266-8659. So simplertrading.com/volume. And you would want the kit or the offer where you already have that VWAP max, or as we call it now, the volume max kit. All right, next up, is the Trendalorian arrow appear after the candle bar close? No, it appears as the criteria is being met. All of my indicators will update as price is moving. I don't think I have a single indicator that waits for the close. So as the criteria is being met, to that question there, that arrow will light up. But if you have any questions specific to the tech stuff, that's why we have that special session with Lorna Bot. But let's say early in the morning, the criteria is being met, but by midday, the criteria is no longer being met, that signal will disappear. But remember, here's what's so important. We're not just waiting for the Trendalorian signal alone. We want the other things in play, right? There's probably going to be at least 1 to 2 other things that are in play. And the Trendalorian, remember, the Trendalorian is the acceleration. A lot of times the Trendalorian might be the last thing that you see when you've already seen 2 and 3 other cues to get in. And the Trendalorian is saying, yep, now the train's leaving the station, right? Great question. Hey there, Evelyn. Volume is the most important thing in trading. I absolutely agree. And I would like to know, to become an expert in reading it, where to enter and where to exit in a trade. So Evelyn, if you noticed, we combined a 3-step process. Is volume at support or resistance? What is the underlying structure of the market? Because look, I don't want you unknowingly buying into a downtrend. I don't want you unknowingly shorting into an uptrend without a lot of confirmation from some sort of support or resistance from volume. So we start with the volume. Ideally, we transition to a market trend that's much more friendly to the kind of movement that we want to see. And then finally, we wait for a price pattern. And that's the process. Starting with volume, moving with the underlying market trend, waiting for the price pattern. That's the pattern. That's the pattern across 3 dimensions. It's a 3-dimensional approach. All right, next up, if I'm trading a big index, SPY, SPX, would volume matter much for those? Billy Bob, absolutely. I use volume for everything. In fact, even though something is big, remember, it's all relative. So let's say at a certain level, and we use volume and the V-score, day trading and the ES, SPY, and some traders in my room also say, well, we'll just take the SPX spread as an alternative. So that's the choose your own adventure part. We're looking at the ES, we're looking at volume come and go. So think of it this way. If people want to buy the ES futures, it's simply an expression of wanting to buy the S&P. And then we remember that there are multiple ways to buy the S&P. S&P, mini, micro, options, SPY, SPX. So by looking at the 24-hour contract, which is, nearly 24-hour, which is what the ES is, it gives us an edge in understanding the behavior in a more complete way. I'm not saying SPY is incomplete. I'm not saying a 9:30 to 4 p.m. candle is incomplete. I'm just saying that it's not as thorough a read on what price is trying to tell us as something that's been trading for hours before the US market opens, right? And then looking at the ES allows us to go off in a lot of directions. I like to liken it to, remember those choose your own adventure books growing up? That's what it is. That's what it is, right? There's no right or wrong, just making sure why the ES is being bought based on a 24-hour chart, not a 9:30 to 4. That's what's worked for me. And that's always what I'll share with you all, what's worked for me and our traders. All right. With so much fear, why is the VIX not moving? Michelle, there's less fear now. By the way, and I don't have the chart up, but VIX futures were toppy. A lot of this stuff that I'm sharing with you all on the Tesla chart or the S&P chart or the crude oil chart, VIX futures were toppy. VIX futures were absolutely toppy. And there's less fear now. In fact, before we didn't know when we were putting the class together what was going to happen. Last week, Mary Daly, FOMC member Mary Daly, probably did a little baby step into a Fed pivot. She said publicly, it's time for us to start talking about slowing the rate hikes. That's not as important as if Powell said it, but it is a Fed member. And a lot of traders ask me, Rob, is this the beginning of a transition in the messaging? Sure looks like it. Yesterday, Janet Yellen comes out and says, we're thinking about buying the older bonds. We're going to start to recycle them. We're going to buy those old bonds. You can call it recycle, QE, or QT, but what ultimately that does, if Treasury Secretary Yellen and that plan goes through, is that it's going to put a bottom in on bonds in the downtrend on TLT or the bond futures, and it's going to cap rates. And if it caps rates, how soon before we know where the Federal Reserve is going to take rates and stop? It's not that we're happy about the higher rates, but certainty isn't about good or bad. Certainty is, are they done? And the closer we can get to done, that's where that risk is going to start to drop off. And probably for the first time since probably May and then a brief period in August, those daily timeframes are starting to look very interesting because we're seeing a very different macro mood in the market. And volume has been absolutely on top of it because we've seen these support levels in volume. Okay. And again, thank you so much, gang, for flexing with me and for spending this time. I hopefully I didn't cough or sound too terrible. I really appreciate everybody. And this conversation was just too important not to have, because I know just how many traders it can help, because I'm already seeing it. I'm already seeing it. So Ray asks, are the principles you teach universal across all investment types, including crypto? Ray, I won't say all of crypto, but I will say crypto as well, because there's volume. And one of the rules to any of my tools is that it has to be universal and robust. And that simply means it has to work on everything. I cannot have a tool that works on Apple, but not on crude oil. I cannot have a tool that works on bonds, but not on the XLY consumer discretionary ETF. And the reason they do work is because we're focused on participation. We're focused on psychology. People are people. As long as I remember that I'm trading the opinion of people, I'm fine. And so, yes, they absolutely do. If there's volume and the market is liquid, these will work. The liquidity does matter. So I won't say all of crypto, because there's a lot of sort of exotic coins, if you will, but the main ones that have volume, absolutely. I'm in crypto. I've been in crypto for a lot of the reasons that I shared here with you all. I try not to tell people what I bought Bitcoin at, because it makes me kind of sound like a jerk. But suffice to say, it had a lot to do with market structure, volume, and a pattern. And that was in 2016. So you can figure that out in terms of where I'm in from. But some of the same things. Somebody asked me about crypto today, about Bitcoin today, down at 19.9, sorry. Yeah, it's very interesting. And yes, it does work. I heard that about half the volume is on the yeah. I get this question a lot, Rick, and I'm glad you asked it. And no, it's not changing anything. It really isn't. It really isn't. So back in 2008, we would have already been dealing with high frequency. Before that, we would have been dealing with systems trades. Now we've got dark pools, we've got all sorts of things, but keep in mind that how many millions, tens of millions of shares are traded. And remember this, the bench, and this might hopefully answer your question when it comes to that. Why does VWAP help? If something is going to be executed in the pools of darkness, right? Remember that most of your brokerages, your prime brokerages filling these giant orders for these stocks and ETFs, they will usually guarantee a price at least around the VWAP. I mean, can you imagine saying, fill my order, right? Fill my order and just go ahead and get me wherever you can. I've got to have a decent idea of where that fill is going to be, right? And so the VWAP is very much a benchmark. And that's why I don't worry about dark pools and things like that. And I've used services like Flow Algo. I checked this, my friend. I thought that too. I absolutely thought that too. So I started using things like Flow Algo and I think Cheddar. I tried 3 different services, and it did make a difference, the signals that I saw, because the VWAP is still that benchmark. So even if a trade goes off where I can't see it, there's still going to be in some way an adherence to the VWAP. I hope that makes sense, and thank you for the question. All right, how does it fit? And sorry, gang, my voice is starting to go. I apologize. How does this fit with the HPMR? It's a hand in glove fit. So again, let's go back to 4 dimensions of the market. Price. Everyone uses price. It typically stops there. You're learning now volume, which already puts you in elite category because you're using price-based volume. So price-based volume, volatility, and time. So does it fit? Absolutely. It completes it. As a day trader, it completes it, right? How's that going, Jerry Maguire? You complete me? Yes, it completes it. It completes it. It's absolutely hand in glove fit. I see the volume and candle shift, but I'm missing how price is factored in. It's a pattern, DE. So what I teach you all is a pattern in price to look at. And sometimes that pattern might be price itself. It could be a Darvis level, because Darvis is a price-based tool. So it could be Darvis. It could be I like to use a specific pattern, a price. It could be a psychological level. So the price angle of it is usually going to be support resistance or an actual pattern, a price-based pattern. And that's going to be the very last step of the process. Okay. So Samir asks, some of them were, like Samir, for example, Tesla is not usually something that I will trade in sector secrets. We'll usually trade something like XLY. The futures setups, those were things that we did in the futures room. So I'm in a lot of rooms, Samir. Some of them were in sector secrets. Some of them were in futures room. Some of them I did because I've been working this one pattern test throughout 2022. But most of them were taken in one of the rooms. Yeah, I'm in a lot of rooms here at Simpler. The P&L, yeah. So when I see you next week, Zane, those are only end of day. Those are only end of day. I've got a different set of numbers I run for my intraday. I don't combine them, right? Because there's no way. And you ask a great question. So the question was the P&L that I shared with you all before. Was that only the end of day charts? Yes. And gosh, there's a lot of slides in this deck. Yes, it was only end of day. We went over a lot of charts, didn't we? Yes, only end of day. And only in one of my accounts. So I've got 4. So this is only one of my accounts. It's one of my smaller, medium to small accounts. So I'll have them for day trading because there's no way, and you ask a great question, Zane, there's no way I can study the effectiveness of my trading on the end of day if I have them mixed up with intraday charts. So I do separate the two. Yes. All right. Next up. Hey there, Annie. For those of us who are already in Sector Secrets Mastery, should we just participate in the basic package? Well, if you don't have the indicator, Annie, I would recommend basic. And if you want the live trading, which is going to be separate from the sessions in the Sector Secrets Mastery, I would say you'd want the Pro or Elite. So what I would say is, Annie, to your question, the tech session with bot, the beginner breakout session, the long-term portfolio, those are things that are just going to be for class members. So if those have value to you and you think they're going to move the needle, cool, go for Pro or Elite. If you're already a Mastery member, then that's really up to you. But the live trading that happens in the class does not also happen. It does not also happen in the Mastery. So these are going to be separate sessions. So if you want the live trading sessions, then that would end the bonuses. That's where I would say, see what's most meaningful to you. If not, hey, basics are a great package too. Yeah, absolutely. Are the volume tools actively indicating volume of momentum? Sorry, Linda, let me read that. The volume tool is actively indicating volume of both momentum calls and momentum puts. Linda, I don't look at the puts and calls. Yeah, I don't look at the puts and calls separately. I'm just looking at price-based volume. So you're asking specific to puts and calls? No, I'm not studying volume in that regard. No, that's not what it's measuring. So I think the simple answer is cool question, but no, I haven't found that to be necessary. All right. Trish is telling me if you want the Pro or Elite and you're currently a Sector Secrets Mastery member, give the office a call. And I'll see you, by the way, my Sector Secrets folks, I'll see you in the room tomorrow. So if you have any questions on this, we have our double header session where we're going to day trade and then swing trade tomorrow. So if you have any questions and then you want to call the office, you can definitely do that as well. Okay, so I think, how do I determine exactly how and where to anchor the VWAP? So Scott, obviously we're going to go through all the detail in the class, but it's based on time intraday for the day trading, and it's based on date for the end of day. One of the easiest anchors that I still use is the first of the year. Scott, if you want to start with something, right, try with the first of the year. It's a very powerful anchor. And then remember that we can anchor multiple anchored VWAPs, and it's important that we do. Just like, say, a trader would have a 20, 50, 100, 200 moving average, you'll have multiple VWAPs. All right, let's see. I'm just the last bit of the questions. Bear with me here. I think we're caught up. If you have any questions about which delta and days to expiration are commonly used when trading options? Octavio, cool name, by the way. It matters if you're day trading or swing trading. So when I'm day trading, I use the closest expiration with liquidity. And when it comes to further out, I don't want to buy anything with less than 30 days, preferably no less than 45. But it depends on liquidity and what kind of setup we're looking at. Okay. All right. So gang, that is it. All right. We caught that in under the bell. I was wondering if it would go an hour and a half or not, but I wasn't sure that I'd stay conscious for an hour and a half, but I am sweating now. And I think I can stick a fork in me. I'm done. Thank you as always, gang, for your time, for your questions. Please think about the process. Think about how you can add more dimensions to your trading, not just price only, but price, volume, volatility, time. Of course, here we're talking about volume. It's the most important of the other dimensions. Price without volume is simply incomplete, period. All right, gang. I look forward to seeing you in the class. I look forward to seeing you in Charts and Coffee. If you have questions, you can call the office. Part 2 of our conversation, for those of you thinking, Rog, I'm really a day trader, next week. You're going to love it. So this is for daily, even some weekly portfolio type questions. We've got the part 2 for day trading coming up next week on November 2nd. All right. In the meanwhile, when you do buy the package, you get the tools right away. So how cool if you have the tools now and then we do the webinar next week, you can kind of get a better idea of the kind of setups that I'm talking about. Be good to each other, gang. And thank you as always for being a part of the Simpler community. And thanks for your time. I will see you all in the class.